What's up, guys? It's been a crazy start to February. We've seen GME, AMC, BlackBerry, and other meme stocks go way up. Now they seem to be on the downtrend. And today only, GME is down 60%, AMC is down 40%, BlackBerry is down 20%. But some good news: Deep Value is still holding all of his stock. I mean, talk about diamond hands. In other news, Mark Cuban came onto Reddit and did a Q&A today where he told investors, if I were you, I would continue to hold GME. Big moves in crypto. Ethereum broke that 1500 mark today, which should catapult it over $2,000 by the end of February. More on crypto later this week with Shakar. Now, you guys have waited long enough. I'm bringing on another guest and fellow investor to help explain conditional orders, which will take your trading game to the next level. Please welcome Graham. Graham's going to run us through conditional orders. So first of all, explain what are conditional orders.
Conditional orders are, automated buying or selling operations that the computer can execute for you without you pressing any buttons.
Great. So let's just go through the line. Our first is a limit order. Give us the basics about a limit order and how this can help us.
Yeah, so limit order is basically where you set a price which is the maximum you're willing to pay for a stock. So if it's heading on the downward path and you have a limit order, if it hits that point, then you will buy at that point. It can be used to buy dips to get it at a lower cost if you think there's still growth potential. So it's really useful for when you want to buy a stock at a certain price and you're set on that price.
Great, thank you. And then our next conditional order, trailing stop order. When do you use this and how can it be helpful?
Yeah, so trailing stop order is just when you see a stock on the downward trend and you want to get it kind of when it's starting to peak back up again, so it's starting back in the upward trend. So you can set actually a percentage, so let's say 10% higher than what's trending right now, and it kind of trails it, which is why it's called a trailing. And it trails it as it comes down, and then once it hits that mark, then you'll buy. And the purpose of it is just getting it before it takes the huge peak up. So you just get it on the way up, so you can ride it all the way up.
Buy low, sell high. That's something I live my life by. Next, we have stop order. When do we use stop order, Graham?
Yeah, so stop order is basically once a stock hits a certain share price, then it triggers a buy. So on the upward angle, and you think, okay, if it gets to here, then I think it's going to keep going up, then you set limit at that price for when it can execute the buy.
And next, we have a stop limit order. What is that and how do we use it?
Yeah, so stock on that upward trend hits a certain point, and then this is where you set that certain price for when it hits, and then you set another price for when you think it'll drop down a little bit, where it executes a buy right there. So hopefully it'll come back up. So you're just kind of getting a little mini dip to then ride it to the end.
So the last four conditional orders were for buying. These last two are going to be for selling. Our first is a limit order. Graham, what's a limit order for selling and how is it different from buying and when should we use it?
Yeah, so the limit order, limit sell is just going to be your most useful way to sell your stock. If you think you want to sell at a certain price, then you don't have to look at it all day, and you can make sure that it will fill if it gets to a certain price. And it's just a really good way to get out at a certain price so you can just get out before it stops.
And I think another great thing about a limit order is it can sort of act as a doomsday safe. So let's say I have a stock worth $100, my average is $80. I might want to put my limit order at $90. So just in case it goes down, I'm safe, I secure those, I realize that the difference, and I secure my assets. All right, and our next conditional selling order is trailing stop order. Graham, what do you have for us?
Yeah, so this is a super useful one. If you think that a stock's going to run for a you kind of want to get out before there's a sell-off, you can basically have the trailing stop order where it's going up and you have your percentage decrease of where it's going to sell. So it's just following it. And then once it hits that 10% drop, then you're selling. So the purpose of that is when stock is going up and you don't want to set, you don't really know the peak, so you don't want to set a limit order, which we talked about earlier, where it's just going to automatically fill at that point. You want to kind of ride it up. You don't know where it's going to stop, and then boom, right when it drops, 5%, 10%, wherever you want to sell it, where you set the trailing stop order at, it'll come up, and then it'll drop down to your percentage drop, and then it'll execute, and you'll be out. Take your profits.
Wow, that seems super useful. I mean, doing this almost automates trading stocks. Am I right?
Yeah.
Great. All right. Next, we have a stop loss order. Graham, take it away.
Yeah. So stop order, also known as a stop loss. This is a real doomsday scenario. If you are thinking a stock, it's super volatile, could go down, 10% in a day. You don't really want to risk it anymore. You can set a stop loss, and it'll sell at a certain price, and you can get out of potential more losses. So you just want to cut your losses and get out of there.
Makes sense. All right, and our last selling conditional order is stop limit order. Graham, tell us what this is, how it helps us.
Yeah, so stop limit order is, stock's gonna be on a downtrend maybe, and then you set a price for, you kind of think it's the floor, but you want to get out, so you think that it'll go up a little bit, so you set that point where the order will fill. So hopefully, it's going down, hits the floor, maybe some support, and then comes back up and a little bit, and then you want to sell at that, so you get a little bit more profits than just a normal stop loss.
Great, thank you. So that's been our conditional orders with Graham. Thanks for coming on, sharing your knowledge. Hopefully you guys got value from that and you guys can implement that in your day-to-day trading. Please make sure to like, subscribe, and leave a comment of what you liked or what you'd like to see. Also, don't forget, if you'd like to start investing with Webull or Robinhood, go ahead and check the links in the description below to get 2 free stocks when you sign up for Webull and you deposit $100, or 1 free stock with Robinhood. All you have to do is sign up. It's free money. See you next time.